So, hello everyone, and welcome along to the latest edition of Susty Talk, edie's ongoing series of video interviews put together to keep our audience of sustainability and energy professionals talking and feeling connected and optimistic through this period of lockdown and the kind of reopening of offices, which we're now seeing, as you can see by the fact that I'm in my office here in the UK and beyond. I'm edie's content editor, Matt Mace, and joining me for this episode of Susty Talk, we have James Wild, the Group Head of Sustainability at Lloyds Banking Group. So James, thank you so much for agreeing to speak to me. I imagine it's an incredibly busy time for any kind of organisation in the banking sector, especially one that's really kind of made great announcements over the past 9 months or so to really kind of ramp up its focus on sustainability. In terms of Lloyd's and the coronavirus, how has working been for the organisation? Has it been a lot of kind of virtual from home Zoom meetings?
It has, yeah. A large proportion of our colleagues are now working from home. But actually, I found, and I'm sure you'd agree, it actually works very well, and it hasn't affected productivity at all. I don't think this kind of working more in a more agile way, and I think it's very popular with colleagues.
Yeah, I'd agree with that. Yeah, this much more flexibility, and our publishing company Faversham House has been very kind of accommodating for us. We're doing a kind of two sets. We're quite a small company, so two sets of bubbles in terms of people that are allowed in the office. So I've got Thursday and Fridays I'm allowed to come in. This has obviously been recorded on a Friday just before a weekend, which I'm hoping kind of keeps the conversation quite buoyant in that sense. There's been a lot of discussions around the green recovery and the role that green finance is going to play in ensuring that as we recover economically from this financial slump, that money is essentially funneled into the right businesses, organisations, and sectors. But internally at Lloyd's, I want to get a kind of understanding as to how you have framed the coronavirus in terms of your own focus on decarbonisation and climate change, and in terms of green spending. Has it kind of paused anything, or has it actually kind of ramped up your focus in this area?
No, it's a great question. As you said, we've made a number of commitments in the climate change space. 2 years ago, we set out a sustainability strategy, which is very much focused on supporting the UK's transition to a sustainable low carbon economy. And we see this is really important. We're the UK's largest bank. We have a unique role in the economy, and this fits perfectly with our broader purpose of helping Britain prosper. So in January this year, we launched an ambitious goal to accelerate working with our customers, the government and the market to help reduce the emissions we finance by more than 50% by 2030. And we've rooted that in 7 commitments, which are very much anchored around the UK's clean growth strategy, where we can make the most difference. In business, where we're the leading lender in a number of sectors, we want to finance clean growth. In homes, where through Halifax, we provide more than 2 million mortgages. We want to finance the shift to sustainable energy efficient homes. In vehicles, where we've got Lex Auto Lease and Black Horse, and we finance more than 1.4 million vehicles, we want to help that transition to low emission vehicles. And insurance, we move to physical risk because we're one of the largest insurers in the UK, and flooding is such a key issue. We've also got Scottish Widows. So there we're looking to try and create long-term sustainable investment choices for our colleagues, and green bonds. So we're really actively looking to see how we can support the economy in this transition. And I think the whole green recovery, build back better narrative has actually strengthened our internal focus on this rather than anything else. We joined with over 200 UK businesses to support the call to the UK government to embed the transition to net zero into the economic recovery. We've been actively talking to the government about things they can do to stimulate that recovery. And indeed, we've launched a number of propositions over the last couple of months since lockdown started to ease to really start to support our colleagues, our customers in this recovery. A couple of examples to bring it to life. One is in agriculture. And agriculture sector is really important. 10% of UK emissions. We're the largest lender to agriculture. There, we've set up a new proposition which basically helps agricultural farmers work out what they can do to reduce their emissions. We've created a partnership with carbon calculators so they can work out what their current footprint is, and also a partnership with the Woodland Trust, where we'll help them plant trees and woodlands and hedges on their sites. We created a partnership with the Energy Saving Trust, which is a new tool to help homeowners work out how to improve the energy efficiency of their home, and that will work beautifully in tandem with the government's new subsidy scheme to help homeowners pay for energy efficiency improvements. We have an equivalent tool that we've launched for those that own office buildings, so that they can work out what investments they can make and how they can improve their energy efficiency. And also on the pension side, we've just recently launched a new climate transition world equity fund with BlackRock. We helped develop that, and we're the founding investors in that. We've allocated 2 billion as part of our default pension. I think that's really quite important that it's the default, because most people don't make an active choice in where they put their pension. That's in the default, and that money will help to really fund those companies that are actively taking a strong position in the climate transition. So we're making progress. There's an awful lot more we can do, but if anything, that green recovery and build back better story has strengthened our commitment to climate change rather than anything else.
No, that's good to hear, and it sounds like there's an awful lot of initiatives and offerings kind of spinning, which is good to hear. And you mentioned those kind of ambitious climate goals that were announced at the start of the year, and on top of the ambition to kind of reduce those emissions by more than 50%. I think we wrote on edie that Lloyds was essentially at the time, at least, and I think this was around February, one of only 5 organisations that have basically signed up to all 3 of the climate groups business initiatives. So you've got the EV100 to transition to electric vehicles, the RE100 to be powered by 100% renewables, and the EP100, which is essentially around energy productivity. Those were made whilst the impacts of the coronavirus were just starting to get an understanding globally, but in the UK, we were still kind of a month, 6 weeks away from lockdown. From a kind of business standpoint, in terms of integrating electric cars into fleets, improving energy productivity of office spaces and powered by renewables, how's the coronavirus and perhaps this new way, this more flexible way of working, where businesses are perhaps more open to individuals working from home, do you have any kind of views on how that might change those type of targets around that kind of operational and business fleet emissions?
Yeah, we had hit our own in-house carbon footprint targets very early. So we set a target in 2009 to reduce our emissions by 60% by 2030. We hit it last year. So we're actively at the moment calculating what a new target could be. And obviously we're looking at doing that in line with the science. But you're absolutely right. As we look at new ways of working and more agile working, it does create the opportunity to reduce emissions, particularly kind of business travel, but also emissions associated with our office buildings. And so we're actively looking at how we can both meet the needs of our colleagues, but actually also rapidly reduce our in-house footprint in terms of emissions. I think electric vehicles is a really exciting area. That's one where we're a leading provider of electric vehicles. We've got the largest low emission vehicle fleet in the UK. I think there's huge opportunity there. I think also, part of what we're doing within our offer is really help to communicate to customers the benefits of electric vehicles versus conventional vehicles, and why it should meet, from a kind of full cost of ownership perspective, their travel needs. And to make it financially more attractive as well, we've just launched a salary sacrifice scheme for our customers, where people who take up an electric vehicle can get tax benefits associated with it. I think they've got a huge amount of potential, and we've seen a rapid growth in our electric vehicle fleet. It's still a very small proportion of our total fleet, and we've deliberately made sure that our EV100 target isn't just about the vehicles we use within Lloyds Banking Group. It's associated with that 1.4 million vehicles that we finance as a group.
Okay, no, good to know. And I suppose stepping away from the internal services and just more focus on green finance in general, we've spoken to a lot of sustainability professionals who are, I suppose, getting to grips with ESG. It's kind of rising up in prominence in terms of what's on their focus, in terms of disclosing the right data to investors and to the finance market, and that includes banks like Lloyds yourself. It's and in its kind of layman terms, ESG is essentially another kind of phrase for CSR, but through some different, much more kind of stringent parameters, for example. In the discussions that you have with clients and other organizations, is there anything that businesses and sustainability professionals need to be aware of in terms of the information that they can provide, or the stories that they can tell that actually will help the finance sectors, which are probably less further along on the sustainability journey than a lot of the more traditional ones? What kind of partnerships, what kind of conversations need to happen to really make sure that finance can accelerate along this low carbon trajectory?
Yeah, I think it's a great question. It's actually, I'd say there's quite a few levels to it, actually. Um, as a bank, our central role is helping to finance the transition. And really importantly for us, if the question is how can we work with other sustainability professionals and corporates and other kind of companies in this supply chain, we want to do that in partnership. We're experts in providing finance. There's various barriers that our clients face. And so by working in partnership with the government, kind of key advisors, the providers of equipment, we can help to unlock that change. And the examples I gave earlier on agriculture and homes are nice ones where we're really working in partnership with experts in each sector to provide finance. So that's an area where people in this sector can collaborate with banks. We're really looking to partner to unlock the investment opportunity. I think integration of climate change into risk management processes and implementation of TCFD also creates a lot of opportunity. It's critically important to banks, the implementation of TCFD, and it requires the development of new methodologies and capabilities, creating long-term scenarios to identify and quantify climate change risks and opportunities faced by different sectors, analysing them at the client level and integrating into credit application processes. So that means new methods, and significant data gaps need to be filled. And I think what's really important is that we work together as a sector within banking and more broadly to create common methodologies, taxonomies and approaches to data capture so that when we report for investors and other stakeholders, they've got confidence in what we're reporting and they can compare other companies' performance. And we're actively collaborating where we can. So we've joined various initiatives in this space, everything from the UNEP FI, TCFD, banking pilots through to something called the Partnership for Carbon Accounting Financials, a new collaboration to try and work out how a bank should work out its financed emissions. I think ESG reporting is an area in its own right. Again, I think it's really important to collaborate and try and create a single methodology. And I'm very excited by the developments of the World Economic Forum and their ESG reporting guidelines. So we're watching that carefully. We've had a number of conversations with them. The more we can create a common set of rules and criteria and metrics so that we're all reporting the same information, and it makes it very easy for investors and those people trying to rank the performance of companies, the better. And
at a policy level, then, I mean, we've touched on some key frameworks at TCFD, taxonomy, and TCFD in particular looks like it's going to become mandatory in some format next year, although whether that gets delayed with this government, you're never quite sure. But in terms of a policy level, is there anything the investors or the banks like yourself want to see that will really help in terms of shaping the green agenda?
Yeah, I think as an organisation that's trying to provide finance to our customers, I think and a UK-focused organisation, I guess my biggest ask to government when I'm in talking to government is the need to create a clear set of policies to reach our net zero goal in time for the COP. The UK have a fantastic opportunity to show leadership at the COP and create a really strong long-term investment case for firms to invest in the low carbon economy. And so if I had one ask, it would be to kind of fill all those policy gaps that the Committee on Climate Change have highlighted in time for the COP so that we can stand up as a real leader in this space and ask other countries to do the same. I think TCFD is really important. And the government have indicated in their green finance strategy that they'll look to make that mandatory by 2022. Our regulator in the UK, the PRA, is taking a leadership position internationally. And is actually putting very significant requirements on banks to essentially implement the TCFD and do that kind of long-term scenario analysis at a client level over the next 18 months by the end of 2021. So I think that's really powerful, making TCFD mandatory for large firms and in the banking sector. I think it's interesting, the kind of ESG guidelines. I'm not sure there will be necessarily one set of rules that will become law, but I think the more as a community, the more as an industry we can coalesce around a set of guidelines, I think the better, so that we can have common data and common methodologies.
No, that's some really good points there, and I'm really excited about scenario analysis in particular. I think it's such a good exercise. I mean, I don't know how intensive and exhaustive the exercise is. I imagine it's quite an undertaking, but it just seems at a kind of almost like a surface level, such a valuable thing for organisations. And you obviously mentioned that Lloyds are kind of reevaluating its climate goals because of that 60% reduction you recorded, and you want to kind of be in line with climate science. I know for banks and finance sectors in particular, climate science can be quite tough because operationally, scope 1 and 2, fine. Scope 3 is just a completely different kettle of fish almost for banks. It kind of covers lender portfolios, and every time we kind of write a story about a bank, a lender, an asset manager, there's always inevitably some link to a project or a business that's not necessarily, I suppose, in line with what a low carbon future will look like tomorrow. There was a really good discussion I tuned into an edie Sustainable Investment Conference we hosted at the start of this month, which was all about transitional funds and making sure some projects, some companies, some sectors can come along on the journey. But some investors just go straight to a kind of screening process where they only want green companies, green projects, which is both understandable. I'd like to get your views on the role that perhaps a scenario analysis undertaking will do to help, banks like yourself and others in the sector really, look across their portfolio and realise where action needs to happen to perhaps decarbonise a bit more quickly, or whether, actually inclusive transition is important.
It's a great question, and I totally agree that scenario analysis is really powerful because, particularly in the banking environment, it's taking a long-term view as well against each of the key sectors. Often the analysis that's done linked to the regulator is just a 1 or 2 year view. It's really important to take that longer term view and really think about how sectors are going to transition. And you're right, it's challenging for banks. We have to analyse the entire UK economy because, as I described before, we lend to the entire UK economy, and in fact, the global economy, when I'm starting to think about Scottish windows in our investment portfolios. I think it's also really important that we support, and we're very clear that we want to support the transition for those sectors that are more exposed, whether it's a sector like the auto industry, where we're talking about a big substitution from fossil fuel powered vehicles to electric or low emission vehicles, or the power sector, where you're moving from kind of coal through to gas, through to renewable and other low carbon generation types. We've already been very clear to say what we won't fund, and I think it's important to have a bottom line as to say what we won't fund. And a couple of examples of that: in the coal industry, we've said we will not fund any new coal powered power plants. We also won't fund any companies that have more than 30% of, only new companies that have 30% of their revenues from coal power or from coal mining. But it's really important as well to say, look, we need to help those sectors abate. And so we've joined with the World Economic Forum. They've linked up with Mission Possible, looking at the hardest to abate sectors, work out how one can abate those sectors, things like cement or steel, the use of carbon capture and storage, and what the role of finance is in those transition pathways to unlock those new technologies that we need to decarbonise those harder to abate sectors. I think that's really important on the risk side. And we also use the scenario analysis really important on the opportunity side, and that's, it creates a huge opportunity for us. The low carbon economy is forecast to grow at 4 times the rate of the rest of the economy in the UK over the next 10 years. And we've already seen a big growth in our green finance. Over the last 4 years, we provided over 6 billion in green finance to businesses through our Clean Growth Finance initiative. And it's a lovely mix of companies as well. It's everything from the world's largest offshore wind farm to a small SME that has just created a factory that's going to manufacture sustainable t-shirts. So it's a really nice mix that we're funding on the green side and that opportunity side, as well as thinking carefully about how we help our clients transition.
Yeah, no, it's such a crucial transition, but also a hard one. There's talks about this just transition as well, that no parts of society leave behind. And I think coronavirus has kind of proved that actually societal inequalities they massively exist, and that any kind of disruption, whether that's a global pandemic, whether that is a kind of deliberate low carbon transition, it's going to impact different areas of society. And I think one message that perhaps doesn't get shared enough, and perhaps we Edie can do more to share, is actually a low carbon society has to be one for one that works for every part of society. The issue is there, and I'm sure you're no stranger to it, is that sometimes a transition that's that intricate can perhaps be a bit too slow for what's needed. So it's a really interesting time to be discussing this. The appetite's there, the science is there, the technologies are getting there. So hopefully, this decade, as we kind of have kickstarted it, we'll really see acceleration in that efforts. And on that, I wanted to get, I suppose, a final question from you, just be what your kind of near-term focus is. Obviously, you mentioned the new targets which you're currently working on. There's not much left of this year, but are there any kind of key kind of initiatives that you want to be able to really focus on to kind of end 2020 for as weird a year as 2020 has been?
Yeah, it's a great question. We announced our target last year to kind of help work with our customers and the government to reduce the emissions we finance by more than 50%. And we deliberately made that commitment early because there is no methodology for standardized, agreed methodology for doing that. And we really want to help the market reduce the emissions in that way. And so what we're currently doing is really trying to work out what our financed emissions are across the portfolio. We want to set specific targets for each key sector as to what kind of reduction we might see over the next 10 years and how we can support our clients in those sectors really make that transition. So that's a really big priority for us, and we'll give an update on that in our annual report early next year. I think continuing that product development that I described before, I think there's a huge opportunity to bring out in partnership new propositions to help finance the transition, very much focused on the specific challenges and issues in each sector. And I think talking about immediate priorities, the government announced that £2 billion support package for homes, and then through Halifax, we have a really nice interactive tool. I'd encourage people to go on our Halifax website and have a go at it, looking at their own home. Essentially, it enables someone to kind of work out exactly what they can do to improve the energy efficiency of their home, how much it might cost. And in tandem with that government subsidy scheme, we're hoping we can really help to start stimulate homeowners to improve the energy efficiency of their homes, which is one of the critical abatement opportunities in the UK economy.
Yeah, well, as someone who just bought a new home, I definitely will check that
yeah,
tool
do
out.
have a look. It's a great tool.
Okay. Will do. Thank you very much for that, James, and then thank you for your time today and being a guest on this series. I know our audience is always greatly anticipating insight from fellow sustainability professionals, and we at edie will be continuing to offer bespoke articles, reports, and exclusive interviews like this on the green recovery. And on the topic, our audience, if you are interested in hearing more thought leadership on the green recovery, be sure to check out Edie's series of free green recovery themed webinars and masterclasses that's taking place later this month, Wednesday, 23rd of September. We got the Aldersgate Group, BT, Ella's Kitchen, UK GBC, all among the lineup. There'll be a link below the video and in the article for this interview if you want any information. But yeah, James, thank you so much for your time today.
My pleasure. Thank you, Matt.
And thank you everyone for watching as well. And in the meantime, stay safe, stay positive, and keep up the susty talk.